All right, welcome back, guys. This is Crypto Rolly, the crypto watch that never stops. Live technical analysis, price predictions, and trading. Remember, this is not financial advice. Do your own research, trade at your own risk. Hit that like, subscribe, tick the bell for notifications, share with your friends. All right, let's look at the market. Crazy day yesterday. Red all across the board. Bitcoin's down about 7% in the past 24 hours. Yesterday we had a flash crash about 10% in less than 1 hour. I believe that was the 5th largest dump in less than 1 hour in Bitcoin's history. Crazy move. Ethereum down 10%, EOS 12%, Chainlink 12%. The only real gainer from yesterday was this Kyber network, which is still up 9%. Yesterday it was up about 20%, and that's in the face of all of this red here. Why did Kyber network go up? Well, they're being listed on Coinbase Pro. Remember, about a week ago, I was saying in a bull market, these news stories for altcoins is actually pumping the price, where in the bear trend or the bear market, when we had a news story, news event, we didn't see price react. Even the Coinbase effect, where in previous years a rumor to be put on Coinbase, you would see a large run up on, we saw XRP, ZRX, Ethereum Classic. We saw the price effect or those coins affected when we saw the rumors, and then that effect just kind of disappeared. But it's good to see Kyber did go up with the Coinbase news. So, this is still bullish, possibly. We're still in a bull market, so don't freak out. And the crypto fear and greed index, people are scared. We're down to a 44. I would be kind of tense or nervous myself, especially if you were a hodler. If you're a trader, you're used to this. And if you're a trader, hopefully you took some profits. You used the stop loss method. Otherwise, yeah, if you're just a bag holder, I would be kind of scared, because this could be, the beginning of a little bit more downside, okay? We'll talk about that, okay? We're still in an uptrend. We're still, in a bull narrative, but there could be more to this pullback, okay? The Bitcoin halving is in 81 days. We're getting closer and closer. And I did want to share this article with you, that Bitcoin halving overhyped previous cycle led to another 6-month crypto winter. So in the previous halvings, we had, a pre-halving hype rally, but then right before the halving, there was a bit of a sell-off, and we call this buy the rumor, sell the news. And then, after the halving, still price went sideways for, a month or two, and then we started creeping back up. And if you look at this chart here, this explains it pretty well. So this is where we are now, except for we're probably down here. And this was our run up to 14K, and this was the previous halving, how they had a run up, sell off, kind of looks the same here. Then they had an attempt back up, and then they sold off right before the halving, and then it even fell much further after the halving. I think it was about a total around 35%. Actually, don't quote me on that. I forget where I saw that, but you can see that we have this drop off before the halving, and then after the halving it continued up. So could we be seeing the same thing here? Possibility. So the halving, depending on who you watch on YouTube, who you listen to on Twitter, it can be all just good stories and halving, we're going up, we're going to 100K. But look at the last one and look at the reality of the situation, okay? So just because the halving's coming in doesn't mean we're going straight to 100K or a million. Just be aware of this. It doesn't have to happen the exact same way, but you need to be aware of it. So let's talk about what happened yesterday. So before I went into a short, I was thinking we were in a bit of a bull flag, and I'm using some screenshots from my Twitter. You can follow me, Crypto Rolly, on Twitter. I do a lot of posts there as well. So we had, our dump off, and then there was a CME gap. We went up, we filled that CME gap. We started going sideways, And considering that we had such a bullish day, it was a bullish engulfing on the daily. We were above all the moving averages, going sideways. This was a potential, the key word is potential, bull flag formation, and had it played out, your target would have been around 10,800. However, it did not play out, and I had to flip my bias when I started seeing things adding up. So first it started with, okay, so we had that pump here, and it looked like, you know, in the previous video I said we mostly filled the CME, but it wasn't completely filled. And then yesterday we had a nice spike up. The whole gap was filled, but then it was rejected, and it was rejected back beneath this rising trend line on the CME. I showed, I was like, okay guys, everything looks bullish minus two things: testing, retesting the rising support line, now flipped resistance, and a potential lower high trajectory. So we broke that rising trend line, and I can show you better on the TradingView chart in a second. We broke that, came up, filled the gap, rejected back beneath it. So now this support line that was coming up from way down here was now acting as resistance. So it's like, I can't believe, but I can, that we just did all of this just to fill the gap, and now we're going to go back down. So I was like, all right, well, I'm not calling short yet, but we're having trouble getting back above this trend line. And then Ethereum, we were looking at a possible double top. It wasn't confirmed yet. This could have also been a bull flag potentially, but we were going to need to see us close a candle above this horizontal resistance here. And I had also a rising trend line here on Ethereum, and I saw we closed a 4-hour candle beneath it. That was a warning sign. Our stochastics were coming down, and you had this downtrend, this bearish divergence on the Ethereum RSI. So that was a warning. And then I went to the 12-hour, and I was like, wow, this bearish divergence, if this is a confirmed local top, this is just super ugly, okay? And double top formations are common as reversal formations in crypto. So I was like, you know what? I know there's a golden cross, but you know, these bearish flags are showing up. And then finally, just like the CME, we had this uptrend on Bitcoin. We broke beneath it, and we're retesting it as resistance and could not close back above it. We also had our 4-hour Stokes high and looking to cross down. We had bearish divergence on the RSI and not able to break above that trend line. The 4-hour Heikin Ashi was turning red. These were all warning signals. I wasn't, you know, I'm not 100% positive in any trade, because there, you know, even when everything is adding up, a whale can, or, you know, whales can just manipulate, whatever you want to call it, dump, pump, they can just move the price when they want. So you're never 100%. But I was willing to take that risk, and boy, oh boy, we dropped 10% hard. I learned from a few days ago when I didn't take my profit. Well, this time I did take my profit. I shorted from around 10,100. I closed about half at 9,300-ish, and the other half at 9,600. Major profit. I had to walk away. I'm feeling good. I can come back, you know, a new trader, a fresh trader. You know, it was kind of a stressful couple days just because I was like, why did I not take profits? I know this lesson. When you have the opportunity to take profits in this market, you have to. The volatility is so crazy up and down. If you don't take it, the market makers will just take that profit right back from you. And worse, you end up maybe even losing, okay? So I explained everything that happened yesterday. Now let's look at what's going on now, okay? The Bitcoin dominance, we did get a big bounce on the Bitcoin dominance chart, so that means that it's not necessarily that Bitcoin's performing better, but that altcoins are performing worse. So when Bitcoin's falling, the altcoins are falling harder. That's why Bitcoin dominance is going up. you know, we had this horizontal drawn here where it's resistance support, and we're, you know, it's not perfect. Charting on, you know, the Bitcoin dominance chart or the Bitfinex shorts or longs isn't going to be so perfect, but you can do some charting. And you can see also on the daily, the RSI was like the lowest it's been in a very long time, or actually since way back here in 2017. So this was super low. We were looking for a bounce here. We just weren't sure. Was it because Bitcoin was going to blast, you know, to 12K and leave the altcoins behind, outperforming, or was Bitcoin going to dump and the altcoins were going to dump harder? And that was what happened. Okay. Real quick, you know, looking at XRP, this is a daily chart. You can see that this yellow horizontal was pretty important. It was a nice support here all the way along, and then we broke beneath it. It was super bearish. We were able to get back above it, and I was looking for XRP to potentially hold this horizontal. And you can see where it acted as support. When we did dump down, it still stayed support. Came up and dumped down again, holding support. We are now closing 4-hour candles beneath this. You know, we also had that here, so it doesn't mean that we're definitely going down, but something to keep your eye on if you're XRP, that we're losing this major horizontal support. And you do have you know, lower highs forming here, potentially a weird left shoulder, head, right shoulder. You know, Bitcoin Cash also losing this horizontal support here. This one doesn't go back as far as the XRP, but you can see that it was resistance, support, support, and now we're closing candles beneath that. And you can kind of see this across the board. So if we go back to the Bitcoin chart, you know, Bitcoin's still holding at 95.55. We have, you know, a little bit of a range between 9,500, 94.50 even to 9,600. We can call it more of a box, a support slash resistance box. This this support resistance box goes all the way back here where it was support along the way here, you know, and then resistance here. We got above it, used it as support. On the first dump down, we used it as support, and we're still holding it as support now. So can we end up maintaining support here and then, you know, making another attempt? Possibly. We are looking at lower highs on a daily. So, you know, a couple days ago on the 4-hour, we were looking at a high, lower high, lower high, lower high. And as far as, you know, this trend breaking, we needed to see this lower high trajectory break, and we were able to do that, but you know, this is just a 4-hour, so looking at a larger time frame is more important. And you can see on the daily we do have lower highs. We can see that we also, you know, we had this trend line of support now acting as resistance. Okay, so if we do get a bounce here and the trend has changed temporarily bearish, bounces are meant for shorting. Okay, but you know, this is tricky because, you know, technically we still are in a uptrend. If you look at the weekly, you know, let's show the classic 21 EMA. We're still above all moving averages. We did have our golden cross. You know, I said that, you know, with these golden crosses, sometimes the price will come towards it to meet it, and that's what's happened. So as long as we're still above and in this region, you know, if you zoom out, we're still in an uptrend. Okay, guys, like you can see on this whole rally up, we had, and we talked about this, 30% drops along the way. I mean, look, the pullback here was pretty massive. There. So right now, this is, you know, only, let's take a look real quick. We'll just zoom in to compare. But this pullback isn't even as bad as some of those pullbacks in 2016 or 2017. So this is 10%. I mean, we're talking about 30% in previous rallies, where would 30% take us? A 30%, oh, we keep going. Well, okay, guys, a 30% drop would be all the way down to 7,300, which would be pretty nasty. I don't know if I would feel like we're still in an uptrend if that happened. So hopefully, you know, we do find support here above our golden cross, you know, above the pink 200 simple. I would like to find support here. But, you know, at the same time, you know, if you pull out your Fibonacci's, the Fibonacci retracement, let's take a look at that. From this swing low to this swing high, you can see the 0.236, hard to see it because I have my horizontal drawn. The 0.236 is coming in exactly where that horizontal is drawn. So not only do we have this horizontal going way back to, you know, earlier in 2019, you also have the 0.236 Fibonacci here. So this makes sense for us to find some support. Your next level down using Fibonacci is the 0.382 around 89.50, 0.5 at 84.74, and your 0.618, which is the golden retracement, is at around 8,000. So, you know, the golden retracement is a pretty normal area for price to retrace to in a major pullback. And, you know, the bots and people, traders, they have a large interest in this golden retracement. So we could bounce off here and then continue our uptrend. You know, this would be the last stand. You know, anything, I would love to see us find support here and continue up. You know, each level we go down, it gets more scarier, but the 0.618 wouldn't be totally out of the question. You have this, you know, rising trend line we have drawn here. Just, you know, just to keep, just in case it plays out down the road. You had this touch here, it held up price here, and then we bounced off of it here. So, you know, say we came down pretty harsh, you could find support along here, down this way, or maybe down the road over here. Our halving, you can see, is going to be in May, right around this area. So do we have a pullback before that, you know, and we start trading around here, or even in this region, and then we take off later in the year? That's a possibility as well, okay? So, you know, that's using Fibonacci's. Let me get rid of that. Using my horizontals, though, my next area of interest would be this right here, around 91.50. That was, you know, we created a range here, and then there was a range created here. So what I would be looking for, possibly, you know, if you wanted to look for a short, I would wait till we officially see. We haven't closed a 4-hour candle beneath this horizontal yet. We on the dump, we came back up, and then we've been going sideways. Earlier this morning, that we actually tried to dump again, and now we're price is getting pulled back above. So until we close a 4-hour candle beneath this region, I wouldn't be looking for more downside action. And but if we start doing that, you might have a breakdown and then a retest as resistance, and then come back down to 91.50, and you know, you can see how this governed as resistance and support. So that would make sense maybe to fill out that region. And you know, and until that happens, I don't need to talk about down here, okay? This is critical. So we could say, you know, you have this as your next support, and if we do bounce from here, a possible, you know, resistance, we got this downtrend coming down here. You know, you could form another lower high. We might even, you know, what would be kind of crazy, not crazy, nothing's crazy in crypto, but let's just say that we have this horizontal at 9,600, and we have a lower high trajectory. We could bounce, we could bounce and then rejected another lower high, but still find support on our horizontal and form a bit of a descending triangle. Unfortunately, descending triangle formations are usually bearish, and if this happened, you would be looking for a potential breakdown of the descending triangle. That would look a lot like 14K's descending triangle. You saw once we topped out, Once this parabolic rally topped out, we had a descending triangle that lasted for a while, and once it broke down, it broke bearish. Okay, so could this move be a smaller version of this move? That is a possibility. So are we going to form a descending triangle here before breaking down? These are possibilities. Okay, let me delete these drawings here. Okay, let's look at the CME just real quick. So the CME did fill. We did have this rising trend line now acting as resistance. You can also see a flat line of support. And just curious on the daily, I wanted to look at the moving averages, see how we were looking here on our moving averages. So today's candle could close beneath the 21 EMA. We do want to see the daily 21 EMA act as support. And the reason I'm looking at the CME is because this excludes the weekend shenanigans. You know, we see, you know, wild manipulated moves over the weekend. CME doesn't have that in the chart, so sometimes it's a bit more cleaner. But you can see that we'll see what happens. There's still plenty of time. Excuse me. Plenty of time left in this daily candle, but if we get a close beneath 21 EMA, we could see the pink 200 SMA tested on CMEs at 9100. So we'll keep that in mind here. Going back to our Bitstamp chart, we did close yesterday's 21 EMA beneath it, and this candle basically is looking to see if it can get back above, or if we have a full open and close beneath the 21 EMA, that could trigger a move down to the 50 EMA coming in here at 9140. All right, so I basically got the meat of everything out the way with that, and let's just do our usual breakdown. Okay, so hit the like, comment, subscribe, tick the bell. All right, so let's go to the 4 hour and we'll do our breakdown. Okay, so guys, you know, with these videos, some of them are going to be longer than others, but I generally like to get the most important stuff out the way in the beginning, and then the second half of the video, I always do a 4 hour, 12 hour daily, weekly breakdown of my most important indicators. You know, if you want to get a real in-depth look at everything, if you want to see how I'm trading, everything that I'm taking into account, you know, if you're learning, this is a great way to learn. Okay, but all the important stuff we talked about. Okay, so now we're just getting down to the nitty-gritty. Here we go. 4 hour, 4 hours. So the 200 EMA, the pink 200 simple, did hold support. So this is good to see. You know, if we want to like maintain this uptrend, we do want to see this hold as support as well. We talked about the horizontal. The horizontal is super important. Above all else, you know, horizontals probably hold the most weight. I mean, they hold more weight than patterns, even more so than these indicators sometimes. Okay, you do see our moving averages crossing down below. We do have the lower highs. We do have a change in trend here. Our stochastic crossed down, and you know, they're not all the way down low yet. So possibly when we see a cross up on the 4 hour stochastic, that might be the signal for the next you know, pump up bounce. Okay, but if the trend has changed, our bearish signals are going to be stronger than our bullish signals. But you can see once we finally kind of started momentum up, we saw the price go up. So keep an eye on when this 4 hour starts to cross possibly. I can't really confirm this as a local bottom yet, but if we do get a move up here, this will be a bullish divergence. You can see that the price came down lower here than it did here, but our RSI is higher here than here. But this is not a confirmed local bottom, so if we end up breaking down, this RSI can come lower. You know, and the other day, see, we talk about a lot of stuff, and it's hard, you know, there's a lot of indicators conflicting sometimes, so it makes it difficult. But when we were here, I said that, you know, we had broken this trend. We saw how we had this low, higher low, higher low, higher low, higher low, higher low, and then this was a lower low on the RSI, and that had changed in trend. So, and I said that we can come much lower. You know, we weren't even oversold yet on the 4 hour, and we could come lower. But I was like, you know what? We could come up and form a lower high on the RSI and then come lower. If you were watching the video, you will remember that I said that. Now, I didn't think we would come all the way up here. That's why I was going to hold my short. I thought, yeah, we might come up to test where I entered my short, but I don't think it will go much higher. And, well, I was wrong on that one, and we did come up. We had to fill the gap. This strengthens the CME gap argument more than anything else. I mean, literally, this whole move basically looks like we just to fill the gap. Otherwise, like I was, you know what? I was doubting the whole CME gap, and I was thinking, you know, that's what everyone's expecting, so maybe it won't happen. So that's why I was like, okay, if we do come up here, we'll probably get rejected here, maintaining this lower high. But we filled that gap and then dumped. I mean, it's ridiculous. So anyways, this came up higher than I thought, but still it's lower highs, okay? Let's look at our Bollinger Bands. We're in the bearish zone here. Your resistance, if we do pop up, could possibly resistance be at 10,000. No, that's wrong. At 98.30. So, you know, if you're looking for shorts, you want to short the bounce. I don't necessarily want to short the bottom. I'm not a bottom shorter. I'll look for a break of that horizontal and a retest, something like that. And even that will be shorting a bounce because you'll drop, bounce, retest, and then you short it, okay? Otherwise, if I short down here and then we pump, it's, you know, I'm going to get stopped out, okay? So moving on, the Ichimoku clouds. Ichimoku clouds, the bottom of the cloud is holding as support here. So, you know, if we lose that horizontal, we'll also lose the 4 hour Ichimoku cloud, and you have a bearish Kumo cross here. This is tightening up, and we'll have to see if a red cloud forms, okay? Let's go to our 12 hour. On the 12 hour, we have the pink baseline holding as support currently, and our lagging span is looking to possibly cross beneath this. So when the lagging span crosses beneath price, that's also a bearish signal. But you do have this Ichimoku cloud support here on the 12 hour. Going on to our Bollinger Bands, you're right, you know, you're finding support here along the bottom of the band. You have your resistance here. Our moving averages, we barely closed beneath the 50 EMA on the 12 hour. We open and close this candle here and looking possibly to do the same. So you do have resistance coming in at 9,600. So 9,600 was our, you know, roundabout, you know, even number of support. But it's looking like, you know, maybe 9,500 is going to be a little more accurate. I mean, it's a box, like I was saying. But here you see that 9,600 is actually resistance, okay? But we haven't been rejected hard. So that's why I'm thinking that, you know, you're still looking at a box of support. And we're just in the midst of it, okay? 9,550 seems to be holding. Our stochastics. You know, yesterday we were looking at a potential cross up, which was good. And, you know, these cross ups in a bull rally were good. But, you know, we're kind of in a bear trend. So these are going to be less reliable at the moment. So now crosses down are more reliable potentially. You can see that we have this lower high trajectory on the 12-hour RSI. There's still room to go for oversold conditions. And this doesn't know what it wants to do, but could potentially cross back down. Okay. Your support on the 12-hour RSI is at 91.22. So that would be a next area of interest. And also you can see what we were talking about, 91.50. Okay, so yeah, same area. This 100 EMA on the 12 hours coming up to meet that horizontal right there. And that horizontal, form this range here is also the top of this this wick here. So this came up resistance and then acted as support. Okay, so you can see how that's lining up right now. Let's go to the daily. On the daily, we did close beneath the yellow 21 EMA and looking for open and close. If this candle opens and closes beneath the 21 EMA, not the greatest sign, and we're looking at the 50 EMA at 91.40, similar to what I just said about the 12 hour. Okay, and you have the pink 200 simple, we want to stay above. We talked about that at the top of the video. Our stochastics still coming down, still room to go. If this pullback is more severe than we anticipated, you have plenty of room to come down on the RSI. So we broke this rising trend line on the RSI and we were forming lower highs. We had bearish divergence. All of the flags were there, so this isn't that big of a surprise. I think just everyone's so bullish about the halving, but we can see before the halving there's actually usually pullbacks. The golden cross, but these golden crosses can actually be fake outs. Let's look at the death cross real quick from the death cross that we had before. So we'll just go down and show that real quick while it's on my mind. So we had our golden cross on the 200, the 50 simple and the 200 simple on the daily. And price is coming down towards it. We could find our bounce right in this area or this area. Typically these are more macro signals, not immediate. And I spoke about that. It doesn't mean that price has to just skyrocket immediately, but it's good to see on the macro. But we had a death cross here, and right as we had the death cross, we just had a super short squeeze pump. So everyone that was like death cross, we're going down to 5K, load up the shorts, got destroyed. And people are like golden cross, I'm going all in. A lot of people got wrecked. That's because everyone were all looking at the same chart, and people with the big money, they can do the opposite of what dumb money's doing. I mean, everyone knows that golden cross is bullish, and now we dump. Okay, so sometimes it's good to have a contrarian opinion. Most traders lose, so I don't really want to be on the same side as most traders. Okay, sometimes they're right. Hey, all the Moon Boys were right this entire rally. The Moon Boys had their day in the sun, so to say, all the way here, but it's not going to be that easy. That was something else that I said. I was pretty skeptical that we were just going to drop down to the 21 EMA and bounce up and then just continue to 12K, 14K. Like when we bounced here and started moving up, I was like, some reason that just seems too easy, and there's nothing easy about Bitcoin. Okay, so yeah, what a fake out and then dump. So you gotta be ready for anything, basically, and that's why the sooner you can realize that you don't know everything, anything can happen, the better. That way you're prepared for both sides. That way you keep a smaller risk per trade. You don't go all in. You don't use your liquidation as a stop. Okay, you want to use. I like to use stop losses. In meaningful spots. I don't just arbitrarily post a stop loss. I like to use them. Let's just, for example, if we are trading up here, might want to have my stop loss down here. Okay, you know what I mean? Or if you were trading here, you might have it down there. just having, stops that are meaningful based on price action, just not arbitrary, okay? But yeah, that's why I do that, because, when I was a amateur or a newbie way back in this area, I didn't use stop losses. I thought liquidation was my stop, and I used to ladder into losing positions when I was so determined that I was correct. I would just add to a losing position, moving my liquidation point higher or lower, and then and sometimes that played out well for me, and then when it didn't, it wrecked my account. So ever since then, I've never used my liquidation ever again as a stop, okay? And stop loss method can be tricky, and in the beginning, you might get stopped out a lot because you just don't know where to properly place those stops. But the more you do it, the more practice you have, the more you'll understand a better proper stop loss method, and it actually works out better in the long run, okay? So that's just from my own experience, but the only way we can learn sometimes is through experience, okay? So I think I talked enough about the daily. We can look at the Ichimoku just real quick. We did break beneath the blue conversion line. Your support's way down here. But like I said, if you zoom out, you have a green cloud forming on the daily. So this is still, technically, potentially still in an uptrend, okay? Let's go to the weekly here. On the weekly, we did hit our resistance in the top of the cloud, and the bottom of your cloud can be support. If we come down that far, it's going to be down at 86.80, okay? There is a CME gap around 85.50, I believe. It's a really tiny gap. I'm not going to hold my breath to see that gap filled, but there are a lot of people talking about, that CME gap down there. Let's see if I have it charted out still. Yeah, you have one here, and then like a $10 or $20 gap here. Like I say, these are so small, I'm not too worried about it. On the daily or weekly, you can't even see them. You have to go down to like a 4-hour just to see them. But if you do believe in the gaps, and they all have to be filled, well, you have this one here is a little larger. This one's super small. And then we do have this one up here. So yeah, it's taken a long time. But maybe towards the second half of this year we'll fill it, or maybe we fill it soon. I don't know, but that is still here. On the daily, all of these filled. Where are we? Look, we've had the gap here, massive dump just to fill it. We had a gap here, we filled it. This gap took a long time to fill, but it got filled. This one we had a gap here and then filled that with this massive dump here. Just if you keep going back in time, all of these gaps have been filled at some point. Filled, you know what I mean? So like this is 2 years of trading on the CME, and we're looking 2 years, that's over 100 weekends, and we have what, like 3 gaps out of over 100. That's over 97% accuracy on these gaps eventually getting filled, okay? Over 97%. So I don't know, man. Obviously they don't have to be filled immediately. Like this took a while to fill, this one took a while to fill, this one still hasn't filled, but they do. But like I say, I'm more worried about these massive gaps. These tiny little ones I can hardly see, not a big deal. So if these don't get filled, I'm not even really considering that. This one's even kind of small. All right, enough about that. Let's go back to the weekly and finish this up. Okay, guys? Lots happened, but, I want to do my due diligence and show you everything that I'm looking at. Okay? And we're above the 21 EMA. This is at 87.22, so we want to maintain that for our bullish narrative. The Bollinger Bands, we did hit the resistance here as well. Your support is at 84.21 on the middle BB, but we are in the bullish zone. So could we kind of flag out here? Like this could be a massive bull flag possibly, or we could just range in here for a little while, go sideways for a while, okay? And you know, currently I'm flat. You know, I'm always holding BTC, but I don't have any trades open. After such a massive victory on my behalf yesterday, it's a good chance for me to slow down and, you know, really think about my trading strategy. You know, I was maybe a little worked up the past few days. Emotions were running high. So this is a good time to slow it down. You know, I have a lot of rules and checklists that I'm supposed to do before my trades that I was ignoring, and I would like to go back to that strategy. So, you know, I will move some funds over to Coinbase Pro, you know, to look at some altcoins. Part of the reason I missed alt season was I didn't even have any money in an exchange where I could trade alts. I'm sitting all on, you know, leverage. Or I have my HODL account where I just don't touch, and then I have, you know, my BTC on like, you know, margin exchanges where I only, you know, short and long Bitcoin. So I didn't even have my opportunity to trade altcoins because I didn't have my money there. And I'm just being kind of stubborn or lazy. So I'm going to move still haven't done it, going to move over to Coinbase Pro, and I'll do some charting. I am interested in Link and Tezos just because they've been doing so well. They've been outperforming just about everyone else. And then, you know, if there's other opportunities in Ethereum or, you know, some of the other coins there, you know, I'll be able to jump on it a lot quicker. I won't have to wait for transfer of funds, you know, and, you know, if we maintain the 21 EMA across the board on all cryptocurrency, you know, maybe this is a good pullback to buy. So these are things today, tomorrow, I'm working more on my strategy. I don't really mind if price drops and I miss another opportunity to short, because I'm looking at it this way. I had a massive victory yesterday. I'm in the profit on the year. If Bitcoin decides to just keep pumping up, I don't care that I missed a long, because my USD value on my Bitcoin will rise. I'm happy either way. Now, if Bitcoin falls, yeah, my USD value might drop a little bit. But if we fall, and, you know, this might be hard for some people to take. If you're a hodler, you might not like this. Maybe if you're a hodler, it's a good opportunity for you to dollar cost average. As a trader, if we fall, this is just more opportunity for me to stack BTC at lower levels. You know, once we start breaking above 10K and then we were looking to break above 10.5, I was getting nervous that we were going to blast off before I had what I felt was enough time to stack as much BTC as I want. The longer we stay down here, you know, the longer I have the opportunity to build my BTC at lower levels, so that when we do take off, I don't mind, you know, taking profits and, you know, obviously have more profits. If we just shoot up and I'm chasing price, it's not going to be as fun as if I can just stack, and then we go. So that's just the trader's perspective, okay? If you're a hodler, maybe this is just more time to accumulate, okay? So I'm not too worried if price goes down. You know, I'm looking at this as a glass half full. Either direction, I'm looking at it in a positive way. Kind of crazy after a 10% drop, but you know, we're used to that in crypto, okay? So our weekly Stokes, you know, this is the first hint we've seen at a cross down, but it's still rising, I won't call this much of a cross yet. So we'll have to monitor our weekly Stokes, and let's just go to the Heikin Ashi and finish it up. This video has probably been a longer one. Whoa, 45 minutes. So like I said, guys, wow, this is the longest video I've ever done. I did most of the important stuff at the beginning, and the second half was for the people who've been following me and really want to watch and learn. Okay, I hope you've been able to take something from this. I can't believe I've just gone 45 minutes. Let's do Heikin-Ashi real quick, and then I am definitely out of here, guys. Whoo, me oh my. Heikin-Ashi, weekly, possibly a reversal candle, wicks on both sides. Could that be this guy here? Who knows? Or maybe we're just right here and we'll continue up, okay? Our 3-day, we have bearish, and it's probably going to look bearish across the board. Maybe the 2 days looking for a, or not, the 4-hour could be possibly bullish or reversal. So bearish on the 2-day, on the 1-day, bearish, 12-hour, bearish, and on the 4-hour, still bearish, but you know, wicks on both sides. So maybe we'll start getting a reversal candle here, or on the next one get a little bit of a bounce, and then we'll have to see if it's a good shorting opportunity, or maybe this is the floor, and you know, we find some support around 95, 9600 before taking off. We'll have to see what happens, one level at a time. But I've been recording way too long today, and I appreciate you. If you've watched all the way through, you are my favorite. What was the saying? I don't know. Love you guys. Thanks. We'll see you next time.